What's going on YouTube? So today I'm going to give you 5 reasons why I quit trading options and navigated over to the futures market. I want you to stick to the end of this video because I'm going to give you one extra tip and show you the best platform you can get started with your futures journey today. Without further ado, let's dive right into this. So they're both high leverage products, meaning that you can essentially, with a small amount of capital, you can control a large asset or an instrument. And that is the only thing they have in common. So moving forward, you're going to see how totally different they are. The first thing about futures is that you're going to get a unique tax break. 40% of your gains are going to be taxed in short term, while 60% will be taxed long term. And with options, you're going to notice that it's all typically through capital gains tax. The reason why futures gets an upper advantage when it comes to your tax breaks is because when you're taxed on a long-term basis, they tend to take out less money from taxes on those gains compared with short term, which is typically what you do with options, because you tend to day trade options or hold it for just maybe a few weeks. Moving on up. Second reason is the PDT rule. Futures has no PDT rule, which means you can take a trade at 9, make a lose. You can take that same money, take a trade at 10 o'clock and rinse and repeat all the way through your entire day. I would not recommend that, but you don't necessarily need 25,000 in your account to take multiple trades per day. With option, they do have a PDT rule, and if you decide to go with a cash account to avoid the PDT rule, you still need your cash to get settled. So an example is if you buy Apple stock options at 9:30 as soon as the market opens, and you sell that at a profit, maybe you doubled your money. You essentially need that money to get settled before you can use it again in that same day. So you essentially can trade that money till the next day. Unless you have more funds in your account, then you're kind of tied to that. And that is on a cash account. If it's not a cash account, then you only have the 3 trades, within the spirit of 5 trading days. So that's pretty much what a PDT rule is. 25,000 is the number that you need to be above. Let's keep going down. So with futures, you can trade up to 23 hours, 6 days a week. The only day you can trade futures is literally on Saturday. And the 1 hour during the weekday is between 5 to 6 p.m. Eastern time that you can trade futures. You can wake up at 3 in the morning and trade ES or a SPY if you like. With options, clearly you can only trade when the market is open between 9:30 Eastern all the way through to 4 p.m. Eastern. The fourth reason now I love futures is because of true price action. I'll tell you a story of when I used to day trade options. And if I get into a position in SPY at, let's say 500, because that's just a nice number. SPY dips down $1, goes down to $4.99, and then it comes back up to 500. I'm still gonna be on the loss on my option contract just because of theta and decay, which is why I'm emphasizing here that you need to learn your Greeks. You have to learn your Greeks with trading options. If you do not know your Greeks, you need to stop trading options right now and go study up on the Greeks, because all you're doing is donating money to the stock market. You might as well open a charity and you almost might as well just light your money on fire at this point, because you're just donating money. Greeks is where options tend to get a lot more confusing to the regular person. In reality, futures is the easier one to trade. Futures is the one you can teach your grandma, whoever in this planet you feel as though is not up to speed with technology. Options is actually the more complicated tool, which is where you need to learn a whole lot of variables when you're trading options. So when it comes to true price action, when it comes to buying something, and if it goes down and it comes back to where you bought it, you should be at zero, no loss, no gain. Another situation is if you buy a call for Apple, let's use Apple again. I don't know why I'm using Apple so much, maybe because I have an Apple Watch, but anyway, you bought a 150 call, Apple is trading at 148, and it doesn't get to 150. It just keeps bouncing between 148.50 and 147.50 and doing this little zigzaggy nonsense. You're losing money because you're losing money through theta. Theta is one of the Greeks. They have about 5 of them. Theta is one of them that you need to pay attention to. Futures, depending on when you got in and when you get out, you can almost make money or you can just break it even, and that's pretty much one of the biggest things. You tend to lose less money with futures than you would with options. Options, you have way more reasons to lose You know, you have to guess the direction right, you have to guess the momentum, you have to guess the volume, and you have to make sure it all happens within the time of your expiration. With futures, you know, you can buy it and it can go sideways for the first hour and you're still going to be right where you need to be. And you can set a stop loss because futures doesn't have to do with Greeks. That's another thing I didn't put up here. Stop losses. It's damn near impossible to set up a stop loss with options because when you factor in theta and decay, your play can still be legit. You can buy a play at 9:30, and because of theta and decay, you're hitting a stop loss somewhere around 10:30 and 11. But overall on the chart, your play is still legit, and it still hasn't been invalid. So setting a stop loss for options technically doesn't make too much sense because it's so difficult to navigate that. But I know I'm spending a lot of time with this particular reason because this is one of the biggest reasons why I actually stopped trading options. But let's move on next to the next reason. The bonus reason right now, because we're basically at the bonus point. With futures, you have the opportunity to become what we call a funded trader. With options, I'm just gonna leave it at that. With futures, let me go into what a funded trader is. So if you're navigating the waters and going into futures, I would not recommend you taking your sweat capital, be it 3,000, be it 20,000, and diving right into trading futures. I would always recommend starting out with a platform. Like I started out with Tradeovate, and I just used a demo account I think they had it for a week, and then wanted me to flip live. But before you flip live, I would recommend joining a prop firm. And one of the bonus things in this video is I'm gonna show you the right prop firm that you need to go with, because there are a lot of prop firms that are scams here, and I don't want to lead you on the wrong path. Why, Ina? Why do you think we should go in a prop firm? The reason that you should go with a prop firm is because you want to spend the least amount of money while you're learning this future market. And one of the easiest way to limit your losses is by buying an account versus using your cold hard-earned cash. All right? Because you're going to learn a lot of things with futures compared with options. Because you can trade 30 times a day with futures. Options, good luck with that. But with futures, you can literally trade almost every 5 minutes if you wanted to. You can trade every 5 minute stick from 9 to 4 o'clock, and even do pre and after market. Yeah, understanding that is big. Understanding how to control your emotions when you have the ability to do that is big. So navigating into a prop firm, paying $50, $100 to get an account that is like a 50K account or 100K account, and using that as your training wheel, while also getting the opportunity to become a funded trader, would differentiate you from, taking $5,000 of your hard-earned money and starting it in a live account and trading that sucker 20 times a day for the next 2 weeks and blowing that all the way down to $0. So in one instance, you're going to lose $100. In the next instance, you're going to lose $5,000. And I guarantee you, I've heard this a lot. A lot of people talk bad about prop firms, but in reality, you need to figure out how to understand futures and then take the money you're making from futures, or even the experience you're gaining from the prop firms, and navigate that into a live account. But do not start at a live account. I promise you, you're not going to like it. I know if you make $2,000 on your prop firm account, you're probably going to be like, dude, this could have been real money. But wait till when you lose $4,000 in one day. Wait till you have a bad week and you lose like 10 grand. You're going to be super happy that is on a prop firm account versus a live account. I promise you that. So yeah, that leads up to the prop firm. What prop firm do I recommend for you starting out? The prop firm that I recommend for you starting out is Topstep X. Like I said earlier, I used to trade with Tradeovate, but I always had these issues with Tradeovate, even when I was using the prop firm challenges, because they are very much known in the space, and most prop firms like Topstep, Apex, they both use Tradeovate. But I always had issues with my indicators flashing in and out on Tradeovate, phantom orders. So when Topstep actually introduced their own platform, Topstep X, it was a legit game changer, and it just automates the entire process. And I'm actually going to pull it up for you just so you can take a look really quick. This platform to you. So let's go to settings. Let's go to risk settings. You can control what type of risk settings and profit brackets you have. So you can get into a position, and as soon as you get into the position, it's going to have your stop loss predetermined. So the stop loss is $350. profit is 750. So that's a 2-to-1. Copy trade into multiple accounts. You can just so much flexibility within this, and the best part of it is that you don't necessarily have to worry about a different platform. Everything is done in-house, and they also don't charge you fees. Apparently they're pretty good with like a no-fee trade, so you can really go bananas and do like 20-30 trades, which I don't recommend though, but I don't have to worry too much about that. I'm gonna link a video. If you like to try out Topstep, by the way, there's a link below to get a discount, 40% discount. You can almost get 2 accounts for the price of 1 through my discount link. So take full advantage of that. The other thing I'd like to highlight is this video. I'm gonna put a video somewhere on the screen on how I got funded with Topstep, the things that I learned while I was going through that process, and I'm going to share that with you on how to help you become funded as well. So yeah, feel free to watch that video as well. It's going to help you out as far as help you navigate into becoming a funded trader. And yeah, I'll see you later. Peace.